Hello everybody, here with Martin Panev, Chief Account Executive and Trading Analyst GDMFX. Welcome to today's European Session Market Outlooks. As usual, we're going to start with a short coverage of the main markets, starting with North American markets, where in the US we saw an uptrend on the Dow and the Nasdaq, 50 points, over 50 points for the Nasdaq. The Dixie Index up to 98.22 from 97.55. Yesterday we had Chicago Fed National Activity Index, worse than expected, 0.24, 3 and 6 mid-month bill auctions as expected and lower than previous. Three events today and tomorrow in the calendar. However, investors will put some focus on the housing data scheduled for tomorrow. European markets, the German DAX 140 points up yesterday, opened with a gap of 70 points up today, another 60 up so far. The French index, the CAC 40, is also on an uptrend over 100 pips. Major movers were the euro versus the Australian dollar, 140 points range. We are waiting for Germany and European zone data. Tier 1 data. The FTSE 100 lost 25 points yesterday. Basically, some fundamental analysis. As the general election in the UK gets nearer, the investors have started considering turning bullish on the sterling after the political uncertainty passes. The economic forecast for the UK shows it will outperform his peers, the main peers of 10. The expectations are for a 2.6 GDP growth on a yearly basis, with 2.1 for the G10. And there are still speculations that the Bank of England may be the first major central bank to hike interest rates after the Fed. The forecast for the sterling's performance has changed on the upside, while as early as February, analysts were predicting a substantial decline. In the election race, none of the three possible outcomes will bring much optimism for the investors. A Tory win, for example, will mean that the European Union referendum in 2017, if not earlier, a Labour win would mean a wider deficit for public spending and more regulations for business. A hung parliament will mean lack of stability. The biggest mover yesterday was the pound versus the Aussie again, 140 pips up, 230 range, 40 pips already today, even more. Tomorrow, we're expecting to see the central bank's MPC rate votes. Moving along to the Asian markets, a little change on the Nikkei 225 yesterday, only 25 points range. The Japanese yen, though, did 100 pips range versus most of its rivals yesterday, caused mainly as per the slightly negative economic indexes in the calendar. Today, important, we are looking for imports and exports. Those are due today and projected with severe uprise, along with the merchandise trade balance outlook. Moving along to the commodities sector, starting with the S&P 500 index, which had a range of almost 20 points yesterday, closed at almost 2,100. Gold had a range of $18. Overnight, the gold futures plunged on a Monday amid a stronger dollar. The yellow metal prices rose slightly in the early Asia yesterday, with a focus on Greece's ability to negotiate with creditors ahead of major debt payments in the coming month. Silver had a range of 50 cents yesterday, closed at almost $16. The WTI crude oil had $3 range yesterday, 57.54 is the price right now. Oil prices rose on Monday after a drop in stockpiles, and the delivery point for U.S. crude in the second half of last week outweighed pressure from near record high production in Saudi Arabia. The Petrobras scandal buried Brazil's dream of offshore oil. There are at least 50 billion barrels underneath salt water and sand. Yesterday, the Saudi oil minister told Reuters in Seoul that the number one crude exporter expected to produce a near record high of around 10 million barrels per day. This is this month in April. That was all from me from today. Thank you very much for your attention. I wish you a successful trading. Cheers. Bye-bye.